Welcome back. Today, we're breaking down the 15 wealth-building assets you should consider investing in right now. Whether you're starting with $100 or diversifying a big portfolio, there's something here for everyone. Let's dive in. Let's dive into the world of investments, shall we? First up, stocks, the classic investment. They're a cornerstone of wealth building and a fundamental part of the financial landscape. Understanding stocks is crucial for anyone looking to grow their money over the long term. When you buy a stock, you're not just purchasing a ticker symbol. You own a piece of a real company, a tangible asset that represents a portion of its earnings and future potential. It's like being a part owner of a business. Think of iconic brands like Apple, a company that has revolutionized technology and consumer electronics, or Tesla, a pioneer in electric vehicles and sustainable energy solutions. By owning their stock, you participate in their success. Over time, stocks have delivered some of the best returns, consistently outperforming other asset classes. This is thanks to compounding, where your earnings generate further earnings, creating a snowball effect that accelerates wealth accumulation. Yes, there's risk and volatility. The stock market can experience ups and downs, and individual stock prices can fluctuate significantly. But long-term, the market trends upward, rewarding patient investors who stay the course. Start with a brokerage account. Opening one is easier than ever, with numerous online platforms available. Fractional shares make it easy to get started with even small amounts of money, allowing you to own a portion of expensive stocks. Do your research, understand the companies you're investing in, and focus on strong, well-managed businesses with growth potential. Invest wisely, be patient, and let your money grow over time, harnessing the power of the stock market. Stocks are the foundation of most successful portfolios, providing the potential for significant long-term growth and wealth creation. Next, let's explore real estate, a tangible asset, something you can physically see and touch. Unlike stocks or bonds, real estate offers a sense of grounded security. It's brick and mortar, land and location. The beauty of real estate lies in its potential to generate income in multiple ways. You earn through appreciation as the property value increases over time, and through rental income, the consistent cash flow from tenants. These two streams can create a powerful wealth-building engine. Real estate also offers the advantage of leverage, often using leverage to control big assets with less cash up front. A mortgage allows you to control a property worth hundreds of thousands of dollars with a relatively small down payment, amplifying your potential returns. In many cases, tenants pay your mortgage, covering the majority, if not all, of your monthly expenses associated with the property. This is the power of rental income at work. As your tenants pay down the mortgage, you're building your equity over time, increasing your ownership stake in the property with each passing month. This equity represents a growing asset base that you can tap into later. However, it's not always passive. Landlords deal with maintenance issues, like leaky faucets and broken appliances, and vacancies, periods when the property is unoccupied and not generating income. These challenges require time, effort, and sometimes unexpected expenses. But the rewards can be huge. The potential for significant financial gain is a major draw for real estate investors. Real estate can provide steady cash flow from rental income and long-term wealth accumulation through property appreciation and equity growth. It's a strategy that can build a solid financial foundation. The real estate market offers a diverse range of options, from single-family homes, ideal for first-time investors, to apartment buildings, which can generate substantial income streams. For some, real estate can even replace your 9-to-5, providing enough passive income to allow you to pursue other passions or simply enjoy a more flexible lifestyle. It takes work, dedication, and a willingness to learn the ins and outs of the market, but the payoff is undeniable for those who are committed to building a successful real estate portfolio. Real estate is a proven path to financial independence, offering a blend of income generation, asset appreciation, and long-term wealth creation. It's a powerful tool for building a secure financial future. Want stock market growth without picking winners? Index funds are your answer. They track entire markets, giving you instant diversification and low fees. Even Warren Buffett recommends them for most investors. Set it, forget it, and let the market work for you. Bonds are the stabilizers in your portfolio. You lend money to governments or companies and earn steady interest. They're less volatile than stocks and help preserve capital. Bonds cushion your portfolio during market downturns. Returns are lower, but so is the risk. A healthy mix of stocks and bonds keeps your investments balanced. Love real estate but not the landlord headaches? Check out REITs. These companies own income-producing properties and pay out most profits as dividends. You get real estate exposure and steady income, no toilets to fix. Buy and sell REITs like stocks, making them accessible and liquid, a great way to diversify with a small amount of capital. Mutual funds pool money to invest in diversified portfolios, often managed by professionals. You get expertise and diversification in one package, but beware, higher fees and most managers don't beat the market long-term. Research the fund's track record and fees before investing. Mutual funds offer convenience, but watch those costs. ETFs combine the best of mutual funds and stocks. They offer diversification, low costs, and trade throughout the day. You can target broad markets or specific sectors. ETFs are tax-efficient and flexible, perfect for modern investors. For low-cost, flexible investing, ETFs are hard to beat. Enter the Wild West cryptocurrencies like Bitcoin and Ethereum. High risk, high reward, prices swing wildly, and you could lose it all. Crypto is decentralized and appeals to those seeking alternatives to traditional finance. Only invest what you can afford to lose and do your research. For most, crypto should be a small slice of the portfolio. Gold and silver are classic safe haven assets. They don't generate income, but they protect against inflation and market crashes. Precious metals add stability and diversification. Invest directly or through ETFs for convenience. A small allocation can help balance your portfolio. Owning a small business is the ultimate active investment. You control everything and can build significant cash flow and equity. The upside is huge, but so is the risk and effort required. Most businesses fail, but success can be life-changing. It's not passive, but it's a powerful wealth builder for the ambitious. Invest your time, talent, and money to create real value. Peer-to-peer lending lets you act as the bank, earning interest by funding loans online. Diversify across many loans to manage risk. Returns can beat savings accounts, but defaults are a real risk. Stick to high-quality borrowers and spread your investments. For those comfortable with risk, P2P lending offers steady passive income. Collectibles, art, coins, cars, are tangible, unique investments. Value depends on rarity and demand, not the stock market. Returns can be huge, but the market is illiquid and requires expertise. Costs for storage and selling can be high. For passionate experts, collectibles can be both fun and profitable. Intellectual property like books, music, or patents can generate long-term passive income. Create once, earn royalties for years. You can also buy existing IP and collect future income. It's a complex area, but digital tools make it more accessible than ever. IP turns creativity into a cash-flowing asset. High-yield savings accounts are essential for your emergency fund. Keep 3-6 months of expenses here, safe, liquid, and earning higher interest than regular banks. It won't make you rich, but it protects your investments during emergencies. Stability is the foundation of wealth. Don't skip this step. Private equity means investing in companies before they go public. Returns can be huge, but so are the risks and time horizons. New platforms are making private equity more accessible. It's still for those with high risk tolerance and patience. For the right investor, it's a powerful way to diversify. That's 15 wealth-building assets. These are just a few examples to get you thinking about the diverse range of opportunities available to you. Remember, building wealth isn't about getting rich quick. It's about making smart, informed decisions over time. It's about understanding the different avenues for investment and choosing the ones that align with your personal goals and risk tolerance. To kickstart your journey to financial freedom, this journey might seem daunting at first, but with the right knowledge and a solid plan, it's absolutely achievable. Financial freedom is about having the ability to make choices without being constrained by financial limitations. It's about having the peace of mind that comes from knowing you're in control of your financial future. Diversification is key. It's the cornerstone of any successful investment strategy. By spreading your investments across different asset classes, you reduce your overall risk and increase your chances of long-term growth. Don't put all your eggs in one basket. This old adage is particularly relevant in the world of investing. If you concentrate all your investments in a single asset, you're exposing yourself to significant risk. If that asset performs poorly, your entire portfolio could suffer. Start simple. Don't feel pressured to jump into complex investments right away. Begin with the basics and gradually expand your knowledge and portfolio as you become more comfortable. Learn as you go. The world of finance is constantly evolving, so it's important to stay informed and continue learning. Read books, follow reputable financial news sources, and consider taking online courses to expand your knowledge and build confidence over time. As you gain experience and see your investments grow, your confidence will naturally increase. This confidence will empower you to make bolder and more informed decisions in the future. Most people should begin with index funds or ETFs. These are low-cost, diversified investment vehicles that track a specific market index, such as the S&P 500. They offer instant diversification and are a great way to get started with investing. Then branch out. Once you have a solid foundation with index funds or ETFs, you can explore other investment options, such as individual stocks, bonds, real estate, or even alternative investments. Wealth building is a marathon, not a sprint. It requires patience, discipline, and a long-term perspective. Don't get discouraged by short-term market fluctuations or setbacks. Stay focused on your goals and keep making consistent progress. If you found this valuable and are serious about taking control of your financial future, there are many resources available to help you on your journey. Like this video to show your support and help others discover this valuable information. Subscribe to our channel for more insightful content on personal finance, investing, and wealth-building strategies, and share with a friend. Knowledge is power, and by sharing this video, you can empower your friends and family to take control of their financial lives as well. Let me know in the comments which asset you're most excited about, or if you have any questions about the topics we covered. I'm always happy to engage with our community and provide further guidance. See you in the next video. And remember, the path to financial freedom starts with a single step. Take that step today.